Hey traders, welcome to our weekly report. I am Raghee. This is my report. Great to see everyone. We are going to kick off our conversation with a look at what is going on the economic calendar coming up this week. We do have the third Friday of the month coming up this week, so that's something that's going to be looming out on Friday, and definitely a reason to see major psychological levels, high open interest levels on the options definitely in play. So keep that in mind as we head towards the end of this week. But the bigger thing for me is, how is the market going to respond in terms of this post CPI world that we're living in, and do we see last week's movement, we're generating any more follow through? PPI is coming up. Core PPI, FOMC members. That's not till Tuesday. Monday's pretty quiet, as you can see. Brainerd's going to be speaking. That's probably the biggest thing that we're going to see tomorrow, 11:30 a.m. Eastern, FOMC member Brainerd. And then moving over to PPI, core PPI, till we get to Wednesday, core retail sales. Now we get to see a little bit about the health of the consumer. That's something that we want to keep an eye on. Not going to be as big as, say, maybe PPI, but I'd keep an eye on any of these red hot zones, right? These high impact, high volume, high psychology events that we are going to be keeping an eye on. ECB, gang, if you're playing the US dollar, Lagarde is speaking on Wednesday. So, here's what I usually do. And I actually have it in the other room. But so I have a million planners. This just happens to be one of them. What I like to do is I'll put on each one of these days, not just the fact that we have one of these hot zones. That's incomplete. To talk about Lagarde on Wednesday and not talk about the time is just really not. It's as if we don't even know what's happening, right? What time is Lagarde going to speak? Or what time is any particular FOMC member going to speak? And remember that FOMC member Barr on Wednesday. How do we process this? Not just for this particular window, but anytime we have ECB, FOMC, etc. Barr is going to give us an idea of maybe how the Federal Reserve is thinking about the CPI. Lagarde is going to be a direct impact on the euro, of course, but by inverse negative correlation, we're going to see dollar movements. That's a really big one to watch. We have an FOMC member speaking, or 2 or 3 or 4, like we do on Thursday. We have a lot of central bank chatter this week. Lagarde speaks twice, and it seems that we have at least 1 to 2 FOMC member speaking engagements per day. All right, so just heads up for that. That's going to be probably our bigger uncertainty this week, as opposed to those scheduled events that are on the calendar. Gang, I'm spending about 3 minutes on the calendar, 3-4 minutes. Why is that? If we're going to be broadsided by anything, where did that volatility come from? Or why is the market moving this way? It's usually going to be some sort of preparation, discounting of this event. And how do we want to be positioned before Brainerd speaks? Or how does the dollar move before any one of Lagarde's 2 events this week? Keep an eye on those. And that's going to help you manage risk, because obviously hot zones are going to be high volume, high volatility. That is risk. Yes, there might be opportunity in that, but let's focus on what I like to do is, rather than guess what those events are going to do, I like to position myself in such a way where I know where my zones are before the events. And in that way, if they reach a level that's useful to me, maybe it's an HPMR, maybe it's a Darvis level, maybe it's a, overbought stochastic, whatever it may be. When it reaches that level on the volatility of that event, I've potentially got a trade. The volatility was the catalyst. The trade is still going to be rooted in price, volume, volatility, whatnot, right? So trade what we see, not what we think. And anytime that we want to position ourselves before any one of these events, now we're playing a whole lot more riskier game. So let's not do that. All right, gang. As always, questions are the best part of our show here. So let's go ahead and jump into those. And first up on our questions, we have, hey there, Tony. Happy Sunday. Absolutely. Thoughts on QQQ? I'm in a bearish option strategy expiring December 2. All right. So if we're going to look at QQQ, you know what I'm going to do? I'm going to jump on over to the NASDAQ futures. And since you've got that further out expiration, that's going to be more of a daily time frame conversation. Gang, I do not really spend any significant time on other time frames. I know a lot of folks say, Rog, do you use multiple time frame confirmation? I do not. I do not. The idea, and if multiple time frame confirmation really worked, it's one of the first things that we all learn. If that really worked, it would work. It does not matter what a 5-minute chart is doing to think about what then an hour chart's going to be triggering off. It just really, it might seem like, well, shouldn't the 5-minute be, 12 of those is 1 hour, one hour candle? Yes, but that doesn't necessarily mean the 1 hour is then some sort of harbinger to what's happening on a 4-hour, or the 4 hours a harbinger to the daily. That type of thinking I have found simply doesn't work. So what does all that mean? 5-minute for day trading, daily time frame for overnight or swing trading, weekly for my longer term positions, aka investments, right? So I hope that makes sense. So that's why, my friend, I'm going to jump on over to the daily. What do we have here? And you have a bearish option strategy. Okay. We are reaching for an overbought zone on the NAS, and that is a conversation that we can have because we're in chop. There's no overbought or oversold in a trend. Remember, again, trends are permanent states of imbalance. All right, for as long as that trend is happening, it's a state of imbalance. The idea here that we could be overbought would probably bode really well for what you're doing. As far as the day, the second, that I do not know. I don't play. Well, in fairness, I don't know when you built the position either, Tony. I don't know if you're in some, where you are positioned from. But if there's going to be an overbought exhaustion again, it's got to happen this week, because this is where volume is topping out, slow stochastic, neutral market, previous Darvis levels of resistance, the 12,000 major psychological level overhead. That this is going to be the week where, if the bears are going to say, we're going to stay in this range, we're not going to allow the market to turn into an uptrend, we're going to top this thing off, I would say the battle is going to happen this week. All right. Thank you for the question. All right. Next up is ZB wasn't neutral during the November 10 break. Okay. No, November 10. Well, I don't consider that a break, but okay. Let's see the rest of it, Mark. Oh, I'm sorry. Let's see the rest of it. Where am I reading? Oh my gosh. Did I just lose what I was reading? Oh, there it is. John. Sorry, Mark. I'll come right back to your question. My apologies. ZB was not neutral during the November 10 breakout. I don't consider that a breakout, John, but it's okay. So the 1, 2, 3 pattern is, oh, right. There's no 1, 2, exactly. There's no 1, 2, 3 pattern there to even discuss, to your point. I mean, it's there, but it's not actionable, right? There's no entry to discuss. Agreed. Yes. How to confirm if more upside, different type, we'll have to look for a different type of setup, or John, now that it is neutral, and I'd like to see one more neutral candle, one more neutral yellow Momo. Doesn't matter. Trend is what I'm looking at. I'd like to see one more neutral day. One thing we could do, to your point, so you're talking breakout from the perspective of the 1, 2, 3. Got it. Wish if it were yellow would have been fine. Let it come back down and maybe retest the, this would be what? 127, 22, 24 area. Let it come back down and retest that number too. That's one thing you can do. 122, 25. Yeah, that's fine. Let it come down and retest. That would be one way to do it. I probably would pass on that, John, for now. But I hear what you're saying. What do we do when a 1, 2, 3 pattern breaks out, to your point, but we're not neutral? Nothing. I'll usually move on personally. And really, I'm still thinking short. I'm still thinking as a short seller. And I'm still going to be looking at this as an overbought market that I'd like to get long puts. So I hope that makes sense, John. Now, good eye, good eye. Now I'm following where you are there. All right, Mark, on the gold. All right, sorry to miss your question there, Mark. Let's circle back. On the gold versus real yield chart, what time period shows when it's good to go long? I'm not going to use that as a reason to go long. So, Mark, so the question Mark's asking is if I'm looking at a real yield chart, which is what this is, and real yields are one way to understand, probably the best way to understand what gold's going to do. All I'm looking for is whether or not the chasm between, inflation, which is the right here, the red line, and the interest rate. All I'm looking to see is whether the red to black line those two lines are narrowing, getting close to one another. That's what I'm looking for. If that's happening, then I'll go look for a buy on gold. So let's go back here. So, Rog, what do you mean if they're getting closer? See how wide the red and the black are? It might be easier to see on the white chart. See how far apart they are, right? As they get closer and closer together, I can start saying it's time to get bullish on gold. But in and of itself, I'm not going to use a real yield chart to go long. I'm going to use gold to go long. Does that make sense, Mark? The real yield chart gives me the environment, right? And the gold chart gives me my setup. And that's the way that I'll look at that. So the real yield gives me my environment. Gold gives me my setup. Real yield cannot be the setup for gold. Gold can only be the setup for gold. So hope that makes sense. All right. I am Group MTCH. Sure. You're short on the daily. Yeah, MTCH had a crazy reaction on earnings. Still double red. Looks like we're retesting those earnings highs or those earning reaction highs. Are we at V-score resistance now? So one thing I will mention, gang, anytime we're wandering into stocks that can do their own thing, MTCH has nothing to do with the S&P in any meaningful way. Maybe not at all. I don't know where MTCH is weighted within the broader averages. That's a challenge because these things can go do their own thing. And that can be challenging in terms of if I have a stock that doesn't need the S&P to do anything for it to make significant moves, that disconnect is harder to measure in terms of that much more synergistic move that I like to take advantage of in the market. That said, your question was simply, are we at V-score resistance? Yes, that would be the -1 read on the V-score. You got it. All right, next up, hey there, Prince, found myself lately taking trades that I had no business being in. We all do it. At some point in our career, we start to bend the rules, massage them even, and not realizing we're breaking it. I hear you. Kudos to recognizing that you're doing that. Can I give you some advice on how to fix the mental game? Seems a lot less tangible than learning about V-score and VWAPs. Prince, I'll tell you this. I'm going to make it sound really simplistic. And I'm sure there are people who have based careers on, the mental game of, discipline. Prince, I'll tell you what, I'm not that disciplined in most of my life. I will be straight up. Sometimes I had pizza for dinner. That's not discipline. I haven't worked out a lot in the last 2 weeks, if at all. There's no discipline there either. But we can kind of slide on that. I'm not going to gain 9 pounds because I had a pizza for dinner tonight. My husband and I had some pepperoni pizza. I'm not going to gain 9 pounds because I had 3 slices of pizza. The training, I've been doing my yoga. Haven't been in the gym with my kettlebells and my ski erg or my rower. Haven't been doing that. But we can kind of get away with that for a little while, right? Here's what's really great about the markets when we don't trade with discipline. It punishes us. It punishes us right away. It punishes mercilessly. And that's why I'm disciplined in trading and not that disciplined in other places, because most places will give us a little bit more rope, right? And trading pretty much tells you right away that you're doing something that's harmful. And that's what's always kept me disciplined. I hate losing. And now that I'm, for a good segment of my life, on and off for the last 20 years, definitely most intensely for the past decade, I've been in some capacity leading some sort of trading room. So not only do I hate losing my money, I hate losing people who are relying on me to help them see the market better. So I'm probably the worst person in the world to ask about this, because I don't consider myself a super disciplined person. But when it comes to this, I don't even think it's discipline. I don't like losing. I hate losing. And there's a saying from Moneyball that I loved. And maybe this is why discipline isn't a thing for me. I hate losing even more than I love winning. And there's a big difference. I resonate with that. Some people love winning. I hate losing more. And that's maybe a muscle I have. How to develop it, my friend, I don't know. But maybe start thinking about, where am I disciplined in certain places, and why am I that way? And maybe if you look and look and look and look, at some point there's a consequence. At some point there's a pain involved. Find the pain point and really, really, really rub some salt in that wound. That's yeah, I know it's maybe a little rough, but that's why I'm disciplined when I trade. So I hope that helps. Hey there, Brooks Conway. How are you? So the CBOE is going to start offering SPY options Tuesday and Thursday. Any anticipated implications? Oh gosh, the zero dated thing. Well, by the way, it's one of a myriad of reasons I could care less what a put call ratio says. Y'all realize, right? The more we have these zero dated options, a put call ratio is really not going to be a useful tool, and it's going to be even less so now. That's one thing. That's one implication. What's the other implication? A lot more people are going to be day trading options. That's what's going to happen. So now, a lot of traders who love the zero dated SPX, which I'm not a big fan of. They're expensive. They're terribly volatile. European style is a far more intense type theta decay reaction. I'm happy about it. I think it's wonderful, because those traders who love the zero dated, we in my rooms, we can start looking at SPY zero dated, and I'm excited about that. So one implication is it's going to give us more opportunity. The other implication is it's going to further erode any usefulness that the put call ratio really ever had. It's going to just continue to diminish that. So that's the way I look at it. But the positive is it's more opportunity for traders who want to day trade those ETF options, which makes me unbelievably happy. Yeah. So great question. Thank you. All right. Next up. Hey there, Mr. Walker. Heard you say no trigger, no trade. It's a lot of traders who've said that over my career. I've heard that so many times, and it's so true, right? No trigger, no trade. Are triggers specific to trading? Are triggers specific to trading and investment style? Of course, right? Trigger is an entry. So trigger is just a single word that describes what are the requirements for me to buy or short a futures contract, stock, buy or sell an options contract. What are the requirements? What are the criteria needed? And if enough of those criteria, if the right criteria are met, I can get into the market. So yes, of course, it's a different set of trigger. It's a different set of criteria for a trigger for a long call versus, say, a day trade where I'm going to short an overbought market, right? So yes. But we're looking at the same things to answer those questions. Okay, what does that mean? What is the structure of the market? Where's the support and resistance? What time is it if I'm day trading? What kind of events are on the economic calendar? I'm going to go through a sort of a mental, it's mental at this point, but there's a checklist in my mind that I'm going through. Check. Some things don't have to be checked. Some things have to be, right? Structure is one of them. I won't try to buy a downtrend. I won't try to short into an uptrend. So some of those things are non-negotiable. Other things are nice to have, but not necessary to have. So absolutely, the simple answer is yes. They are different. But the tools that I'm looking at to answer those questions are not different. So thank you for the question. All right. Now, by the way, we have live trading starting tomorrow. We do have live trading starting tomorrow. Hey, Bot, yeah, what's the weighting of match and NQ though? It's negligible, right? Bot was just telling me on the match question from earlier. I think Groot's question. I think it's negligible, right? I mean, it's not even top 15. I don't even think it's top 50, right? I think it's really, really low. So the further down the food chain, if you will, the asset, the percentage asset that stock is, yeah, it's top 90. Yeah, it's way down there. It's way down there, right? So it might as well not even be weighted. But to your point, it's going to have a little bit more, back to that match question, it's going to have a little bit more adherence to the NAS. So, all right. Thanks, Bot. Back to, tomorrow we have our first day of live trading for there we go, for the class. So super stoked about that. This is going to be day one of up to 4, depending on which level class you're with me. We're going to split it up. So everybody who's taken either the pro or the elite is going to get 1 day trading day with me, 1 swing trading day with me. And then at the elite level, it's 2 of each, but really looking forward to that. Tomorrow morning, 9:20. Again, reminder, my mastery folks, I will not see you tomorrow, but I'll send out an alert in the morning with charts and coffee. All of our other sessions this week should be, I don't think any of the other sessions are affected, but we have live trading tomorrow from 9:20 to 11:30. Really looking forward to that. All right, next up, brighter side, thoughts on the political election results and market impact. 0. I haven't even put any thought into it. I haven't seen anything that's overridden the importance of CPI. No, nothing really. The expectation was not necessarily met in terms of what the markets expected in terms of House seats and whatnot. But I don't think it was anywhere near as important as that CPI number coming in cooler. Yeah, that pretty much pushed all the other narratives out of the way, to be quite frank. Can we take a look at the gold market on the weekly? Sure. All right, so gold on the weekly. Gold on the weekly has most recently gone from a downtrend, a brief period of time in a downtrend, back to neutral, back to being above the anchored VWAP, back to being above the 200 exponential on the weekly. Not a lot I can do with this, but it's a little bit more bullish than it was, say, between October. Well, really, actually, through all of October. It's much more bullish now in November than it was through most of October. That's what I can glean from that weekly chart, Kathy, of gold. All right. Next up, let's see. Dark Matter and battle rap, multiple time frames and too many technicals can confuse. I agree. Look, I'm always going to say it's just my opinion. I don't believe multiple time frame confirmation works, as if there's a cascading effect between the 5, 15, hourly, daily. I just don't use that. But here's what's tricky. And you mentioned technicals. I don't know what too many technicals are, right? I kind of liken it to if we were to look at, say, the dash of, I was watching the Formula One race today in Brazil. If I take a look at the inside of my Honda, right? I go take a look at the inside of my Shelby. I go take a look at the inside of my, I wish I had an F1 car. I take a look at the inside of an F1 car. I take a look at that cockpit in each one of those, right? Even my old Mustang versus my new. They're completely different amounts of information, right? So if someone gets out of I've got an old hot rod. We've got an old Fox body Mustang. Love that thing. Really basic. Really basic. I'm surprised I don't have to crank the windows up and down on that thing. But really basic. And then I take a look at my husband's Shelby. Very different. It's a track car. Very different. Then I go look at what they were driving in Brazil, those F1s. You ever see all that? All this information they're getting. That's the way that I look at technicals, right? It just depends on what your eyes and your skill level are trained to. Some people have far less than I have. Some people think my charts are crazy. And here's the cool thing. It's all relative to 2 things. What kind of information do we need? And do I know what each one of these secret squiggles are telling me? Someone looks at this chart for the first time, it's too much. And it's unexplained, right? But I hear you, my friend. It's too much of anything is not going to get us where we need to go. That's why I think we need to build up gradually and slowly. So each new gauge and each new button, we know what it does and what it's telling us. Agreed. All right. Let's see here. Next up is the way that I use MACD, Danny. It's sure. I mean, I'm not going to get too far into it, but I'll tell you how I use it, which is far more. Look, you can look up what it is online. Like, there's a lot of websites that'll do it far better than I will, right? However, what's the calculation? And here's what I do with it. And we just get right into what I do with it. So I have a indicator called the PB oscillators, and it has a 20 period stochastic just as a label for the reading, and a 12-26-9 MACD just for the reading, and a slow stochastic, a 21K 3D slow stochastic just for the reading. And I don't need to see all the comings and goings of the lines and histograms. However, if you're going to put it on your screen, grab the MACD histogram. It's built into most platforms. Boom, right there. Okay. 12-26-9. I use those default settings. They work amazingly well. That's it, right? That's all I'm looking at. Am I looking at the movement higher and lower here? Absolutely not. I'm not really looking at the way that it's falling or the way that it's moving up. Notice I don't even have the lines on there. Could care less about that either. This is all I need from this. What environment will I use an MACD histogram? Usually in a narrow compressed market where I'm waiting for a breakout. How will I use the MACD histogram? Is it above 0 or below? That's it. And that's the way I use it. As far as why these things do what they do, I've probably looked it up 100 times throughout my career. And I can tell you right now, I couldn't remember at the moment, but how I use it, that's what I want to do with it. That's how I use it. And by the way, that's why I can reduce that entire histogram to just a label that tells me what number it's at. Because if that number is above 0, it's okay for breakout buys if the environment is valid for breakouts, right? So that's the way I'll use that. Let's see. Next up, do I think the odds for October market bottom is now the most likely scenario? I mean, I don't know. It's easy to say we have a bottom when we're moving higher, right? Just like it's easy to say we're going to keep moving down to these crazy lows when we're moving lower. The market is going to attract headlines and analysis that seems most logical under the circumstances. So nobody's calling for new lows as we're surging higher. Nobody's calling for new highs as we're surging lower. The price movement dictates the headlines, really. I have never been a believer of two things. One, I'm not a believer that the market has to collapse. I'm just not. I am also not a believer, and you'll see a lot of newer traders who were not trading in 2008 will start talking about 2008, referencing the current markets. It's a very different market, gang. This is nothing like 2008. You can't pull up two charts and say, oh, look, the patterns are similar. That's not at all going to reflect what was happening in 07, 08, 09 and what's happening here in, say, 2019, 2020, 2021, 2022. I don't believe there's that many similarities, especially when you talk about the credit crisis that we had. That said, the main thing to remember, this is the takeaway, gang. This is what you want to remember tactically. Please do not short into new lows. That has definitely been higher probability for a short squeeze. Because, well, here's one way to look at it. Let's say we were to take out the, right here, November 3 low, which is 37.04 1/4. Let's say we were to take that out. You know how many stop orders that are sitting at 37, say 04 even? They're just below those lows. They want to get short, so they're going to have sell stops waiting. That's the way the markets move. So, a new low, I want to get short with a new low. Because traders love trading in the direction the market is moving. Most traders like to do that. There's going to be another set of traders that are sitting just below that. And they're going to be buying into that. They're going to be buying all that, these folks that want to short, someone's going to be selling it to them. They're going to buy that. What's been happening almost every time, not necessarily immediately, but what's been happening almost every time is we have a little bit of follow through. We saw this here's your low, May low. There's the break, a little bit of follow through, short squeeze commences. Okay, here is your June low, a little bit of lower low, quick short squeeze. We make another little low, more even quicker short squeeze. So think about this. If you want to be short, and I am thinking short right now, short from higher, get long from lower, and know the underlying market that you're trading. Because I cannot buy in this red. I can be long or short in the neutral, in the yellow. And that's the difference. So I've been talking about the market bottoming. In fairness, and I'm not saying look how right I was, because the markets have been all over the place. Really, we've made lower lows. But I've been warning people not to do what I just described. Don't presume the markets are going to go to these catastrophic lows, or that if we break the low for the year, it just means we're going to tumble from there. It's been quite the opposite. And I've been just hopefully in some way effectively warning everybody from doing that since July. I did a bottoming process video on July 7th, and I will still own that. This is still a bottoming process to me. A couple slightly lower lows that were absolutely crushed to the upside. That's not a significant psychological low where the sellers think, we gained the power there. Is there any seller who's shorting at this area thinking, that was a great trade? Zero, right? And every time that happens, it's gonna attract fewer and fewer short sellers, because now people know, that new yearly low, that's where the short squeeze happens. And who's going to want to short into that? So, that's the way I look at that. So do I think it's a bottoming process? I got to own what I put out there. And until something changes, yes, we've been bottoming in a bottoming process since July. What gets us out of this? You might say, okay, Rog, how do we know if we bottom? When we know what the target rate probability is going to be from the Federal Reserve, which seems to be somewhere around 5%. If that seems to be where that target rate or terminal rate, the highest high in the target rate is going to be, where, as I like to say, we peak and plateau, that's it. That's then going to be the green light equity traders need to say, all right, the Federal Reserve's done, and we can move on. That's why a cooler CPI triggers such bullishness, because it inches us closer to that Fed pivot that everyone's waiting for. The Fed pivot is, okay, we've changed our minds. We've done everything we can do. And here's where we're going to start to think about eventually, cutting rates, right? Looks like late 2023, November, last time I checked the Fed Fund futures, is when there's even a little bit of a conversation starting to happen about maybe, very low probability, but maybe a rate cut late next year. Something to think about. All right. Is the dollar going to rebound? Will it be a rebound in the dollar? Well, easiest way to look at that is the two Lagarde events this week, and look at the euro. And yes, the euro is overbought. So if the euro is overbought, the US dollar is likely oversold, and I would look for the US dollar to bounce, the euro to pull back, and both of these to continue to move pretty much this back and forth between the range that they're both in, overbought to oversold, and back and forth. The main catalyst, maybe two, PPI, that's going to be the US data moving euro and dollar, and keep an eye on Lagarde. Two Lagarde speaking events this week. Look, she's the Jay Powell of the ECB, right? When she speaks, the euro is going to move. It's going to move the dollar. So that's what I would keep an eye on with the dollar. All right, gang. Okay, that's a wrap, gang. Sorry, I ran over a little bit today. I hope that helps. And as always, gang, I will see you all tomorrow morning for charts and coffee. All right. And feel free to bring your questions then too. I just kind of go right down the line and take it one at a time. All right. Thanks for joining me for the Raghee Report, gang. As always, if you have any questions or comments, leave them below. Thanks as always for watching. Thanks for smashing that like button. And I'll see you tomorrow.